Rakesh Bhyani, who is the Joint MD of Pantaloon Retail, joins us now on the show to discuss the business and the outcome of the budget for the retail sector. Mr. Bhyani, thanks very much for speaking with us. First up, reports suggest that the Future Group is negotiating on divestment plans in order to bring down its debt. Could you tell us what exactly is the plan there and that's likely to fructify?
Well, I think, in the last board meeting, we had set up a small committee to look at various avenues to unlock capital from the various investments that we have. And we continue to pursue various directions to ensure raise adequate amount of capital from sale of some of our investments to kind of repay back the debts that we have raised over the periods. So, and that's precisely what we have been trying to do. And there are various, as you know, that we beyond the retail business, we had landed up making a lot of investments in retail as well as in supporting services towards retail. And we continue to pursue that direction and are looking forward to hopefully concluding some deals in the near future. Yeah.
Tell us the total debt which the Future Group has in its books and how much does the retail chain have?
Well, on the debt in Pantaloon Retail, I think the last number was close to about 2,800 crores. And then there is Future Value Retail, which is a subsidiary which looks after the retail business, which has another debt. I don't know what the debt level that Future Capital is, but that's not of a concern purely because it's actually in the business of lending capital. And it typically only raises capital to lend further ahead. So it does have a loan book of its own, and there would be borrowings against that loan book. But if we want to just the real thing is to look at what the kind of debts that we carry at Pantaloon Retail level, and the desire to repay that debt is more important to us.
Rakesh, we heard reports about the company looking to become a debt-free company by March 2013. Tell us, how would you look to achieve this objective?
Well, that's the objective that we have. This is what we are trying to work internally on. We believe that's the way we want to build our business going forward. And the direction to that is all that we discussed already. In terms of how first is about getting rid of non-core retail, non-retail businesses, and then look at opportunities within ancillary businesses to retail, and then finally look at some of the retail verticals that we have created, and could be through strategic partnerships, could be through divestments. So we're keeping options open, and we are trying to work towards that direction now.
Are you in talks with any private equity investors to raise some money?
I don't want to comment in terms of who we are talking to, but I'm sure whenever we are able to conclude something, we'll definitely share that first with our board and then with the rest of the shareholders once we get approvals from the board.
We spoke with, of course, Shoppers Stop earlier, and they said that increase in abatement to 70% can trigger drop in apparel prices. Do you concur with that view, and are you looking at revising apparel prices then?
Well, yes, the abatement on textiles, on ready-made garments has increased from 55% to 70%, but the duty has gone up from 10 to 12. So effectively, there's a reduction of 0.9% on the selling price, which is a small reduction, but it's a welcome reduction. But I personally believe the fact that, the government, there is significant merit in the fact that textiles should have been, or ready-made garments should have been at excise duty rate, which is applicable to otherwise textile fabrics, which is at 6% kind of a level. And I think a 6% level would have been a significant reduction, which would have led to a price pass back to the customers, and we would have seen volumes come back in the apparel business. 0.9 is still a reduction. Yes, part of it is going to get passed back to customers, but at the same time, I think there is uncertainty on terms of where the cotton prices are going to be. So we have to really look at as to how things move forward, and wherever possible, I think we would still try and give back the price back to the customer to reduce the price to hope the volumes can increase. But personally, I think somewhere a rate of 6% is something which is more viable for this industry, because it's one thing to say that we are paying 3.6%, but when it comes to the fact that the industry typically sells about 15 to 20% of its product at a discount at the end of the season, the effective rate of duty on the product actually will come to about 5% to 5.5% of the retail price, which is, I think, one of the highest that one is paying on a necessity product like clothing.
Okay, Rakesh, just wondering, are you coming back to the question about raising money or having some strategic partners? Are you looking to induct a strategic partner in the Big Bazaar stores?
I think it's a bit early to say that, but as we've always mentioned, we would be open to look at that idea in the interest of the overall objective of how to become a debt-free enterprise over the next 12 months.